So guys, we got earnings coming out next week on Friday, and oh my god, NIO has actually said that this part of the business is already profitable. Yes, already freaking profitable, all right? But it's just a part of the business. Which part of this business exactly is it? It is, of course, the after sales service business. It has become profitable. Now, they have reported apparently that throughout the entire year of 2024, they have turned profitable for the after sales service part of the business. That's including the service center, doing all that kind of stuff, service orders, etc. And they have reported so apparently, and also that includes accessory sales, like selling stuff like window covers and all sorts of accessories that you might buy. And they had some interesting statistics that I want to share with you guys. So before, only 50% of new car buyers, of new NIO car buyers and Onvo car buyers would buy an accessory. But now that has risen to 90%, all right, in Q4. So that's pretty interesting. So very big increase. That means basically everybody that takes delivery of the car is going to end up buying something, all right, and an accessory for the car. 9 out of 10. And then they also said that the margins for their after sales service has improved dramatically. And they haven't said a figure, but they said the margins have increased fivefold, all right? So that's definitely very good. And throughout the entire year of 2024, they've been kind of pulling back on freebies, and for anything that they can charge you money on, they're going to try to charge you money on, and they're trying to make sure they're profitable, right? Before, it used to be like you get a lot of stuff for free. You scratch a car, you get that for free. You damage the interior, you get it replaced for free. Very good service, but of course, good service shouldn't mean it's free, all right? Free does not mean good service. So they made a lot of sweeping changes, so that's very good to see. And then continuing into 2025, they're going to maintain this and keep the service part of the business profitable. So that's very, 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 very good. Now, what about expectations for earnings that's going to come out next week? This is where it gets a little bit juicy. So in Q4, we of course have record numbers of deliveries, 72,689 vehicles, and that's given for a fact that we can almost pretty much guarantee and expect record revenues. Okay, we can expect record revenues. Just exactly how much record revenues? Well, in Q3, with 61,855 cars, they had revenue from vehicle sales of 2.379 billion US dollars. So that's just from selling cars. So if you do a sort of an extrapolation, all right, and vehicles like revenue per vehicle, and then multiply that by Q4's delivery numbers, you're looking at around 2.79 billion US dollars from vehicle sales. Now, this is almost going to be definitely the top end of the estimate for vehicle sales, because of the fact that most of the increase in deliveries in Q4 were actually Onvo cars, which we know have a lower average selling price. So that just means that this calculation is flawed in the aspect that we have not really factored in this new Onvo vehicle that's much cheaper in price. So that will actually pull the average selling price down a little bit. So we can expect on the higher limit around 2.79 billion from vehicle sales, but the actual number will probably be a little bit lower than that. And that will be the revenue from vehicle sales. Now, of course, in Q3, they saw 2.681 billion in total revenue. So they had about an extra 400 million from like other sources of revenue, whether it's like charging and all sorts of other business ventures and stuff, selling merchandise, etc. So if you do that and you add that 400 million, all right, in extra additional revenue to our higher end of the estimate, you're looking at over possibly 3 billion US dollars in revenue. Possibly on the higher end, okay? We're talking about the higher end. possibly over 3 billion US dollars. That is definitely very, very good. However, the big kicker, all right, the big if is, what about losses? Because at the end of the day, that's all that matters. All right, are you profitable? Are you still going to generate losses? Now, of course, with the service aspect of the business becoming profitable is very nice, but that's not going to turn the entire business profitable. All right, and we should not expect Q4 to be profitable, Q4 numbers for 2024 to be profitable. Okay, we can expect Q4 for 2025 to be profitable. That's their target, that's their goal. We can expect that, but definitely not going to get a profitable quarter. We're going to see some losses. Now, how much loss? That's the big question, okay? Now, consistently the past few quarters, NIO has printed 700, 600 million in losses, net losses per quarter. And of course, that's very discouraging, but there's no indication that this is going to subside. There's no indication that this will decrease. The R&D expenditure is actually the same. They've never made any indication that they're going to reduce R&D expenditure. But then also CapEx, in Q4, they've actually really ramped up Envo marketing and a lot of all sorts of marketing, and incentives were actually pretty big as well in Q4 because they were pushing for sales. So you can actually expect CapEx to maybe increase a little bit, possibly. All right. And then on top of that, just what kind of losses are we expecting? So me personally, if we can see anything less than 500 million in losses, I would call that very, very bullish. All right. If it's less than 500 million in losses, in net loss, that would be very, very good. That shows a very good trajectory. Losses narrowing, that means you're getting closer to profitability. Give it a few more quarters with newer cars, stronger deliveries, better margins, and you're going to possibly see deliveries be very, very good. And speaking of margins, all right, so in Q3, margins were 13.1%. And margins will actually probably, in my personal expectations, I think margins will increase. Primarily because the Envo car is more cost conscious, all right? When they made that car, they're more aware of the cost of materials and everything to make sure that they have very good margins for that car. But you still need to sell a lot of them to be profitable for the Envo brand. You got to sell over 20,000, 30,000 cars for Envo to be profitable. So you're going to see good vehicle margins. Right? I'm expecting vehicle margins to improve from 13.1%, maybe even up to 14% or 15%. But definitely not going to be a profitable quarter nonetheless. Okay. Those are my overall expectations for earnings. I do expect a record revenue, possibly over 3 billion plus in total revenue, and losses is a big if. Less than 500 million, that's going to be very bullish. If it's around 700, 800 million in losses, even more losses, increasing losses, oh my God, that's going to really spook a lot of people, and that's going to look bad. All right. But hopefully their losses narrow. All right. As always, stay safe, stay healthy. Peace out.